Hello and welcome back to Green Pips FX, and on this video I'll basically be showing you guys how we trade the gold pair at Green Pips FX. Now first and foremost, we need to have the basics, right? And those basics of course being structure, right? S&D, supply and demand, and then the last but not least is the confirmation part, and from there risk management just proceeds. So, following a structural narrative from a previous price action, right? Um, we can see that gold has been moving in a quite clear bearish trend. As you can see, price just presented this series of lower low, right? Lower high, lower low, lower high, lower low, lower high, lower low, lower high, right? Lower high, and then lower low. Now from here, this is what happened, right? So price created this, so let's just zoom in and see this quite clearly, right? So from there, price just in this low here and this high here. So price created this lower low, and then price did what, right? So price came up into, price came up into this area of supply, and then this area of supply wasn't strong enough, as you can see. So price comes down and then it fails to take out this high, and instead it creates let's remove these. It creates a a short market structure, right? We can clearly see that price is now failing to break lows, and instead it's just accumulating to distribute into higher prices. So from knowing this, right, what happens next, right? So from here we're just sitting back and waiting to see if price does actually break this low, or instead does what? Change its character. So from there, this is what we had. So price just went above and made that as a change of character, right? From bearish to a newly reinstated bullish market. And from that move, the next thing that we were obliged to look at was an area of demand, right? That area in which price, through its retracement, is going to mitigate, right? And once that mitigation is done, price can now confirm that it's willing to go bullish, and go bullish from there by targeting the highs as the next liquidity run, right? And that's exactly what happened, right? So we just had an area of demand, which was this overall area in here that I did consider as the last place that price sold before it bought very hard. So just this area here being my overall S&D zone, or my bullish order block. Now from there, what do we see next? So price from this high, right, this high here, which is now acting as what? As liquidity, right? So we know that this is a liquidity high, and it's supposed to be a weak high, hence it shouldn't break this low here, right? So from this high, high there, right, we know that price from there is gonna retrace, and the actual area that we're looking forward to in that retracement is this overall area in here. So from this being our overall area, right, we needed to see price coming into this area, right, and then confirming, and after that confirmation we could now take our bullish entries and head to the top side along with the trend. So this is what price does, right? So price comes with the news and wicks, just price comes, attempts to break, never succeeds, right, and then just ending up closing as a wick below this area here. And this was the news, of course. So there was no any confirmation here, so no trades were taken and no losses were taken too. Now from there we just needed to see price now attempting to do that confirmation, and it's magnificent. So this is what price does. So as you can see, price comes, and then this body of a candle closes within the zone, right? It never breaks the zone. And from there, price now does this internal break of structure. So from there, price does this internal break of structure right here, which we're going to name it as a BOS, right? So with this BOS in here, right, we just drop down time frames to the 1 minute chart, and to just look for that area that requires mitigation. Lo and behold, I did have this little man in here. Um, so this right here was our break, and from that break we were left with what? That last down move before the up move, right? AKA our area of demand, or a bullish order block, which was specifically this whole area here. But I just later on refined it into what? I just refined it into this little man here, based on my understanding, of course, and this is no financial advice of any sort. So now we can just remove this. So we just refined it there, and of course I was doing a pre-session analysis, and this was the most potent area that was still not yet mitigated. And as you can see, price within here came and then started to create these liquidity lows in here, right? As you can see, this low here to this low here, right? Almost equal lows, aka what? Liquidity. So if we're having liquidity here and we're having an unmitigated demand zone below that liquidity, then it's, you know, more than a reasonable area for me to look for my buys in there. So I pretty much just had my limit order set here, right? So this was my entry right there being triggered at the session open. It was around 16 hours 40 minutes, and from there my stop loss was just below this overall zone, right? And of course it could have been just below this low, but I wanted to allow, you know, if price wanted to absorb that area, so I just allowed it to about 10 pips. So this is 11, no, it was 10 pips, right? So there, let's go again, and boom, there. So I had this 10 pip stop loss, and I had this wonderful take profit target. So let me just click it there, go to the 5-minute chart. Of course, this area here was my first area of partials, right? Just above this high, because there's liquidity above this high. And you know, we could easily see price breaking this and then retracing, right, before that upward movement could happen, or even, you know, come to take me out at break even. You know, it is what it is. So I had this area here as my first partial area, right? And then I finally had this area in here. So that was like what, the 30-minute, I believe. Yep. So it was like about a 200 pip stop. I mean, sorry, take profit target, which was simply met right there. Boom, right there. So, you know, a 10 pip stop loss with a 200 pip take profit target. And that's the beauty of gold when traded with the MMC footprint strategy. Now, guys, you know, I hope you enjoyed the video. I hope it was very informative to you. I really, really hope you picked up a thing or two throughout my trading. And if you did, you know, don't forget to like, subscribe if you haven't. Turn that bell button on for notifications. And until the next one, guys, stay safe. Have a nice trading week. And of course, peace out.